Hi all. Today we are going to discuss another accounting standard known as IAS 23, borrowing cost. So, see, this borrowing cost also is part of tangible non-current asset. And similarly, like we discussed in the previous episodes, I'm going to divide the session to two topics, that is meaning, and then we have the accounting treatment. It's very easy accounting standard. Won't take much of a time for you to understand and crack all the questions by yourself. So without waiting no time, we are moving with the meaning. So what exactly is a borrowing cost? The terminology borrowing cost is very similar to the interest expense that incurred on a loan. For example, if you take a personal loan, you have to pay the interest, right? Or if you take a home loan, you have to pay the interest. So similarly, when a business organization took bank loans for their business purpose, they will incur borrowing costs. That is the interest expense on bank borrowing or loan. So, so why the importance of this standard for the borrowing cost is the standard provide the management can capitalize. See, they can add up the interest that has been incurred to the cost of an asset. Maybe for example, we have took the loan to purchase an asset, or we have took the loan for construction of a manufacturing plant. See, so for the manufacturing plant, it will take like 2 or 3 years to complete. So that much years we will incur interest expense. So the standard says for that interest expense, we can capitalize that interest expense into the cost of other asset. So see the below line, the borrowing cost that directly relates to acquisition, construction, or production of a qualifying asset. Please listen, qualifying asset must be capitalized as part of the cost of the asset. That is what we discussed just now. See, we have a terminology called qualifying asset. So what is a qualifying asset? So standard says qualifying asset is an asset that necessarily take a substantial period to ready for its intended use or sale. So like we discussed the example that we have discussed, a business which is a car manufacturing business. So the business took a loan to extend their manufacturing plant. So this manufacturing plant will take substantial period of time to complete its construction. So that's what a qualifying asset is known as. So here in our example, this manufacturing plant is a qualifying asset. So how can we identify it as a qualifying asset? Because it took substantial period of time to get it ready for its intended use, or it is used for its intended sale. Got it? So similarly, we need to understand the loan that took is for particularly for the qualifying asset. That is the first thing that we need to check before we capitalize the borrowing cost. And then we can move to the accounting treatment. So here the standard says two different ways of capitalizing the interest expense. That is the interest that incurred for the loan we took. So first one is fund borrowed specifically for the qualifying asset. What is this fund? Fund is the loan that we borrowed. So when an organization borrows loan which is specifically for a qualifying asset, for in our example, the manufacturing plant. So the standard say is we can capitalize the actual borrowing cost incurred for that qualifying asset. And then they are saying less, we need to less the investment income on temporary investment of the fund. So, so to explain more, see, I said that we can capitalize the interest expense that incurred for the manufacturing plant. For see, so we took a loan of 10 lakh. So do you think that this 10 lakh will be used in the same day itself? No, maybe, this construction it took place in 2 year period. So this 10 lakh will be split on a progressive basis. So this 10 lakh is not used in the first day itself. So what we can do, so the unused amount of loan, the business can invest in another in financial instruments. So, and they can obtain income. So that kind of investment income we need to deduct from that expense before capitalizing into the cost of the asset. That is what the standard is saying. So you will get a better picture when we do the example one in the below. See question one. And the second one, the standard says fund borrowed generally. See the explanation. So we need to take the weighted average borrowing cost outstanding during the period, excluding the borrowing specifically for the qualifying asset. See, an organization might have, I'm giving you an example. The organization might have took the loan for different purpose. For, the basis of the credit credibility, the bank may provide loans for the business purpose. That is not specifically for a purchase or a construction. So in that such cases, such kind of loan, what the business use that loan for a construction of a specific qualifying asset, which is not known to the bank. They have not known to the bank, but they have used the loans for their construction of a different qualifying asset. So what the standard says that if we use that generally borrowed fund, we can use the weighted averaged borrowing cost percentage for to calculate the interest expense, and that weighted average borrowing cost interest can be capitalized into the cost of that asset. That we will do an example, a question on the second method also, that is here the question 2. Before that, I need to cover some more theoretical area. After that, we will do the examples. See, and the standard also says not all the borrowing costs can be capitalized into the cost of the asset. They're saying beforehand, we need to check below criteria to commence the capitalization of the borrowing cost. So these three criteria need to be met before we capitalizing the cost of the interest cost of the loan we took. So they're saying we need to check these 3 points before we capitalize the loan. Those were the expenditure of the asset are being incurred. So to explain more, we can use the same example of our car manufacturing company. For the manufacturing company, when they took the loan, the expenditure of the asset are being incurred. So they should have incurred expense for the construction of the manufacturing plant. That should be the first point they need to check. And second thing is borrowing costs are being incurred. What is the borrowing cost? It is the interest expense. So we know that each month the interest will be accumulated. So that interest expense should have been incurred. Because when we took the loan, then that's the day itself they will add the interest expense. So this should have been also been begun. And the third point is activities that are necessary to prepare the asset for its intended use or sales are in progress. But in the same example, see the manufacturing construction activities. See, we can relate that to our example. The construction activities that are necessary to prepare the asset to intended use or sale are in progress. See, so I believe you have got the idea. What the standard says is that before we capitalize this interest expense, we need to see if the expenditure of that asset should have been incurred. The asset should be the qualifying asset. That would take substantial time to ready for its intended use. See, this is the qualifying assets meaning. And the second criteria we need to check is the borrowing cost are being incurred. That is the interest expense should have been begin. That should be from the first day of the loan we took. And the third one is the activities that are necessary to prepare the asset for its intended use or sale are in progress. That we will check. How do we check this? This is checked by when the construction of that plan should have been begun. I hope you all got the point. And also there are two more points that we need to check while we capitalizing the interest expense. That's one. First one is the suspension of the capitalization. See, sometimes we have to suspend the capitalization of the interest expense. And when do we have to suspend that capitalization? When the development is interrupted. What kind of development? These activities that are necessary to prepare the asset to intended use is interrupted. In such cases, we need to exclude those months' interest while capitalizing into the cost of the asset. To explain more, see if the manufacturing plant took 2 years for this completion. See, when there is a political issue happen and there is a 6 months, the construction got interrupted. So this 6 months, we should not capitalize the interest expense. That interest expense, we need to expense it to the P&L. We cannot capitalize it. This is a very important point. This should be tested many times in various ways in our exams. And then we have the cessation of the capitalization. Standard is saying when we can stop the capitalization. So the capitalization is stopped when substantially all the activities necessary to prepare the qualifying asset for intended use and sale completes. So the standard is saying when the asset is in finished condition, then we can stop the capitalization. Got the point? So these all are the theoretical explanation of this IAS 23. I hope it is very simple and you will get more understanding when we do the question. See the first question. Let me move to the Excel sheet. So this question is regarding our first method in the accounting treatment. That is fund borrowed specifically for the qualifying asset. When we borrow the funds specifically for the qualifying asset, how do we use? Which rate we should use? The capitalized actual borrowing cost incurred. That is the actual interest expense that is incurred for that specific loan. So moving to our question. Let us read out the question first. On 1st January 2026, Streeman's company borrowed $1.5 million to finance the production of two assets, both of which were expected to take a year to build. Work started during 2026. In the same year itself, they have started the construction. So this is our third point in our criteria. See, they have started the activities, and then the loan facility was drawn down and incurred on 1st January 2026. Also, our second point, borrowing costs are being incurred and was utilized as below. So they have utilized also. So the expenditure has been incurred. So these three conditions met in our question. So with the remaining funds invested temporarily. So see, the remaining of the fund is invested temporarily. How do we do the temporary investment? We have to less that temporary investment from our total interest cost. Moving on. So let's see the remaining of the question. The loan rate was 9% and the Streamline company can invest surplus fund at 7%. So the requirement is ignoring the compound interest. Calculate the borrowing cost that may be capitalized for each of the asset and consequently the cost of the each asset as at 31st December 2016. So they took the loan on the same year and we need to calculate the interest cost that can be capitalized and also the asset value at the year end. So let's start the answer. We have two assets. First one is alpha. Second one is Bravo. So see, when do we calculate the interest from the first day of the first day itself when the loan is withdrawn. So that is on the 1st January itself. That would be for alpha interest expense for borrowing cost. That would be equal to our, what is the amount? 250 plus 250, 500. 500 into, what is the loan rate? Loan rate is the 9%. 9%. That is for the whole year. That would be 45. So we are doing it in thousands, so it should be 45,000. And for the Bravo, it is 500 plus 500, that is 1,000 into the same 9%, that is 90. So see, and we have, and this is the split of when the fund has been utilized. So from 1st January till 1st July, they use 250 and 500. And they have the remaining of the amount, they can use it as a use and invest in surplus fund that will generate 7% income. So this 7% should be deducted from our interest cost. So the calculation is interest income would be 20 to 50 into 7%. See, what is the period of our investment? That should be 6 months. See, they have used the entire amount from 1st July onwards. So till 30th June, they have invested the 250, the remaining amount. So we should divide 6 divided by 12. See, there is a formula issue. We need to correct. See, it is 8.75. Similarly, for the Bravo also, we have to multiply 500 into 7% multiplied by 6 by 12. How much is the amount? 17.5. So the interest cap can be, so capitalized in interest will be equal to 45 minus the 8.5. And the Bravo 90 minus 7.5. So the total amount that can be capitalized is 108.7. Okay, and also we have an extended question. They are asking cost of the each asset at 31st December 20x6. So what is the investment amount? Cost of the asset will be, we will have for alpha 250 plus 250, that is 500 equal to 500, plus we will have the interest expense that can be capitalized is 36.25, that is 536.25, and then we will have 500 plus 500, that is 1000, plus we will have 72.5. So this should be the value of the asset at the period end. See, and this is the amount that we need to be capitalized. So our 2 requirement is covered. I hope everyone has understood. And then we can move to our second question that is related to weighted average. So weighted average is, this is a second option, weighted average. So what is the standard saying? When the fund is borrowed generally and we use it for a specific qualifying asset, what should we do? We need to calculate the weighted average borrowing cost percentage outstanding during the period, excluding the borrowing cost that has been took for the specific qualifying asset. So we need to consider only the general borrowings. So we can read out the question first. Accounting company had the following loans in place at the beginning and end of 20x6. That is 10% bank loan repayable 20x8. That is 120,000, 120 million, and then we have 9.5% bank loan repayable 80 million. See, and continuing to the question, on 1st January 20x6, Accounting company began construction of a qualifying asset, a piece of machinery for a hydroelectric plant using existing borrowing. Expenditure drawdown for the construction was 30 million on 1st January 20x6. See, so for the total loan, they have incurred 30 million on 1st January 20x6 and they incurred 20 million on 1st October 20x6. They haven't said anything about the surplus investment they can use. So we don't have to be worried about the surplus investment. And the requirement is calculate the borrowing cost that can be capitalized for the hydroelectric plant. So here the main thing that we need to do is to calculate the weighted average borrowing cost. So that will be, we will have that will be, see the formula equal to, we will have, we need to determine the weighted average cost percentage. That will be 10%. See the formula very carefully. 10% into, we need to use the weighted average. That is 120 plus 80. Sorry, 120 divided by 120 plus 80 plus you will have a second loan that is 9.5% into 80 divided by 120 plus 80. So there is a formula error. Let's see what is the formula error here. See, we didn't use the multiplication here. So again, there's a formula error. What is the formula error? See, we don't use the bracket. See, we will have the percentage, that is 10% as our weighted average borrowing cost. And how much do we have to capitalize? The interest expense incurred. So they have to in the drawdown, the withdrawal in 2 different time. That is on 1st January. 1st Jan 20x6. That would be equal to 30 million into our weighted average cost. That is 2.94. And then they took it for 1st October. 1st October. X6. So we need to see, so the interest calculation is pro rata basis. Keep that in mind. So that interest will be equal to, our amount is 20 million into 10%. After October, how many months left? October, November, December. That would be 3 months divided by 12 months. So how much interest can be capitalized? Capitalized interest would be 2.94 plus 0.49. Our answer would be 3.43 is our interest capitalized. I hope you have understood the 2 methods of calculating the interest. So please note, so we have two methods in while calculating the the borrowing cost. Beforehand, you need to see if these three conditions has been met. Also, we need to suspend the capitalization when the development interrupts. That the development is the activities that are necessary to prepare the asset for its intended use or sale. Okay, and we need to stop the capitalization when the asset become ready for its intended use. I hope all have understood the session. Have a nice day.